Welcome to the Closing Beat, everybody. How we doing today? Looks like everything's going well, man. Hope you all are having a good day. As best you can, really. Oh, wow. Where am I looking? I gotta look way over there. Well, that's different. Hey, we got a new setup going on here, man. Trying to play with some things. So this is not going to go well today, just so you know. But we're just playing along here. We're going to cover the stock market. I got a lot to share with you today, so hopefully this does go well because there's a lot going on, man. I don't know. Do you happen to see the market today? A little bit crazy there. Also, our Wine and Wealth series for clients is focused on retirement. Those of you in or near retirement. So this Thursday, that'll be me again doing Wine and Wealth. And we are going to be focusing on the geeky side of some advanced planning there for those of you that are into that or really probably should focus on that sort of thing there. So I hope you'll check that out. All right, let's get started here. Inflation. Inflation was expected to have risen 8.1% in August. That would be down from 8.5% in July. Futures were actually higher this morning. See if we can bounce over there. Go into the morning. This is the you're looking at pre and post market data here. So if you look there overnight and into the morning, futures were up about 0.75%. And then the inflation numbers came out and we fell 2% pretty much just like that there. We gapped down over 2%. So if you were to use the SPY, there you go, you would see the gap, right? I'm showing the futures market so you don't see the gap. But if you use the SPY, you would see that there. This is a gap down of greater than 2%. And it's only the 6th time ever on the day that we got CPI that we've gapped down more than 2%. Ever. Like ever in history, right? So a major outlier type day of what we saw today, and add to the fact that it sold off even more there. 4 of the last 5 times, right, because this is the 6th time, so there's 5 other times. 4 of those last 5 times did exactly what the market did today, meaning it gapped down 2%, then just kept selling off, right? So that part is not odd, but the gap down of 2% or more is, in fact, odd there. Now, those other times where it did this, actually kind of rare times. I went back in history and looked this up just to see. The last 4 times that we actually did sell off throughout the day, we had the long-term capital management crisis there. If you ever read that book, I put it on the shelf there, When Genius Fails. Very interesting book if you want to read that one there. So we had that going on, so the world was kind of focused on that. Make it louder? I can make it louder. Yeah, man. There you go. I got you. I'll take care of you here. So then we had the financial crisis. We had 2011 when we had the U.S. debt downgraded, actually. So that was that one. And then COVID was the last one where we saw that happen in there. So May of 1999 is that 5th other time where there was really nothing going on in the market. That was before the dot-com bust. There was a whole lot that had yet to happen. So gives you an idea there. Now, I don't need to tell you the news. Yeah, make you guys turn your volume down. So I don't have to tell you what happened today, man. Inflation ticked higher by 0.1%. We were expecting it to go down 0.1%. I actually thought it would go down more than that. And so you're expecting minus 0.1, you get 0.1. What does that do? That just gives the Fed the green light there, right? Core CPI higher by 0.6%. It means that coming up next week, the Fed has the green light to raise rates by 0.75% or more, right? So if you were not looking forward to higher rates, that's it. Now, I kind of believe they're going to overdo it. They're going to use this as data to say, holy crap, let's just raise these rates. We're going to nip this thing in the bud. And that's going to overdo it. So I think they're going to raise us possibly into a recession, although we are in a recession, but we're not calling it that. So I don't know what we're going to use to call it a recession, but that's not my job. I am not here to share opinions, though. You know that. I love my stats. I love my facts there. So let's share some stuff with you here. CPI Day has been the most important day this year. You probably could have guessed that, right? Been the most important day of the year, and the average change on CPI Day is the highest comparable to every other year besides 2012. Let me pop over here and share with you. There you go. So here's the average change on every inflation day where the data was reported there. So we added them all up throughout the year, and then we took the average there. We're currently sitting at 1.05, and you have to go back to 2012 actually to 2012 to find a worse point in history. In other words, if you didn't know that inflation was the focus so far this year, there you go, right? It's the only thing anybody cares about. And in the notes from Jazz this week, over this weekend there, it's titled, When Do We Go Higher? So if you're a client or a research member, you want to go in there. I talked about specifically when the markets could go higher. I'll share a little bit of that here with you today. Of course, something a little different and maybe better. I don't know. But if we're looking at inflation, how do we know when the market's going to go higher, right? So we're going to talk about that one there. Anyways, let's go here. There you go. Now, stock market today. Here's the S&P, the sell-off today. A huge tell for the market. You ever wonder what other people are thinking? Well, I mean, today it's pretty obvious, but if you're ever wondering what other people are thinking in the stock market, today was a huge tell. The reason I say that, in the last 5 days in here and this morning, we had a rally based on the inflation numbers coming in better than expected. So people were betting on that being the bottom. Is inflation being lower than expected a reason for the market to bounce? I'll share that with you here in just a moment. But that's what everybody's betting on. Today, inflation comes in higher than expected, everybody out. In other words, everybody that participated right in here and said, I want to be a part of this, inflation's peaking, this is great, they all want it out. That's a huge tell that people were making that bet. They are now no longer making that bet. So what drives the markets higher? Well, we know inflation's the focus. So inflation will continue to be the focus. I've shared 2 different data points with you here to prove that. And so now there's nothing to drive the markets higher. The Fed, if you say, well, maybe they only raise rates 0.50%. Okay, that's not good news. That means they're not combating inflation. If they raise rates more than 0.75%, they have the green light to do that, of course. But if they do, then that may have inflation moving lower, but we won't know for another month, right? We won't have a good feel for that. So huge tell in the markets here today. And now you know why that is the case there. Now, people are betting on the next peak in inflation or the peak in inflation. Do you think inflation has peaked? Even though it did creep up a little bit there, do you think inflation has peaked? Well, let me share something with you here. If inflation has peaked, you want to buy the market. You suck this up and you say, I'm going for it, man. Because when significant inflation moments in the market have come to a peak or hit a top, that was the bottom in the market. So I put together some things here. It wasn't too bad, but I'll share this with you here. We'll go over to the charts. This is in 1950s, right? So this is the purple is the inflation rate. The orange is the stock market. Probably should have chosen a different color. So we have this huge peak in inflation, very similar to what we have now. The inflation rate was 9.36%. When inflation peaked, you were at the bottom of a market. See the market there? That's not as crazy obvious, but that's the bottom. In other words, that was the green light for that trend to continue well into the next couple of years. Little pullbacks here and there, but we like those. If we look at 1974, the window between 1970 and 74, here we have the same thing. In 74, inflation peaked out at 12.3%. When it peaked, look directly below. See the orange? That was the bottom in the market. Even if you were early, you still got the bottom in the market, right? So inflation peaking, we know, is going to cause the markets to bottom. We can go one more further, look into the late 70s into the 80s here. We get into 1980, we hit 14.76%. Some of you may even remember that there. As soon as inflation peaked, that was the bottom in the market, right? Now, this one gave you a few opportunities along the way over the course of 2.5 years, but you did find the bottom in the market. So where do we stand now? We have inflation, right? Peaking? Is it? If you think so, then you use these dips to buy the market. If you need more information, which I think a lot of people after today will need more information, you wait for that information and scale in to when inflation starts to peak. I happen to believe that inflation is in a peaking phase, if you will, but it's not given up too easily there. The Fed is going to make it break. They've made that clear, that even if they have to ruin the economy and ruin the stock market temporarily, they are willing to do that. Now, those are their words, not mine, so very interesting there. Now, okay, moving on. So the NASDAQ. I don't know if you saw what the NASDAQ did today, but it's a bit of a celebration over there. Good old NASDAQ. Congratulations, that is now the 100th time in history, its entire history, where it has lost more than 4% in a day. It was actually quite a bit worse than that today, but that's the 100th time in history. Now, for fun, I could tweak the numbers here and make it seem a little more interesting, but we'll say 7% of all 100 days where the NASDAQ lost more than 4% happened this year. So in other words, 7 out of those 100 times happened this year. Last year, so I just got curious. Last year, you got to go off the charts here, there were no 4% down days. So we're coming out of a period of really, really quiet markets that don't really pull back to now 7, or now 8, total days in 2022 where the NASDAQ has fallen more than 4%. That's wild, right? I'll give you an idea, right? That's how wild that is there. So I started going back year after year, and I'm like, I'm not going to do this all day. If you look back 8 more years, that's where I stopped. I ran out of time. If you look back 8 more years, there's only 3 times in 8 years where the NASDAQ lost more than 4% in one day, or 4%. So think about that for a second. You're living in really, really extreme outlier event times, right? You know, the standard deviation curve, and plot all the events in there. We're over here, or over here if you're looking on the screen, right? So, whoa, huge, huge changes there. Now the S&P, you go, okay, what about the S&P? What's going on there? The S&P, well, let me go back a second. So that the NASDAQ, we got good news, bad news here. What happens after there's a 4% or greater day? The next day averages a 1.26% gain. The day traders are going to love that if we open lower tomorrow and try to give a little bit of a rally. So look for that maybe tomorrow. I don't know. The next week, a loss. So over the next week, the NASDAQ pressure to the downside remains, and we have a loss of minus 0.23%. It's not crazy. If you look at the S&P seems to love down 4% days. If you look over the next week after the S&P does this, regardless of when it happens, the average gain is 1.01%, and there's not a lot of bad days outside of 2008 and COVID that seem to follow. In other words, people attempt to try to buy that bounce. Whether they're right or not plays out. Over the next 1 month, the S&P sees an average gain of 2.04%, meaning people see this as a chance to buy something. I don't know. I think it's too soon to tell that, but that's what you have going on there. I'm going to share more on this tomorrow, get a little bit more detailed, because I started going down a rabbit hole, and I was like, okay, this is pretty cool. We could share some interesting visuals here. That is really weird to like not see the camera. It's somewhere way over there. That's got to be, what, 10 feet away, 15 feet away? That is incredible. That's odd. Anyways, we'll share more on that one tomorrow. I didn't mean to ramble on too much for you today, but really, really an interesting day in terms of all the different records, sadly, that we have set there. So just want to point that out. All right, let's go over to stocks in the news and see what we've got here today. Actually, I don't know how to get there. It's not there. Can I get there? That's our stream information. Let's go like this. There you go. Stocks in the news. I gotcha. Hanging in there. We need one more monitor, huh? All right, check this out. So Morgan Stanley is in the middle of a healthcare conference. There's actually a couple really cool conferences going on right now. There's the Communacopia with Goldman Sachs. Lots of cool stuff coming out with tech and communication stocks. So if you see lots of, well, today they all went down, but if you see things like wild movements there, that's what's going on. Morgan Stanley's having their healthcare conference, so a couple of these names are related to that because it gave those stocks a chance to say, hey, we're Cardinal Healthcare. And you know what? Morgan Stanley and all the analysts that are at this conference there, you guys think we're going to make X, or we're going to do revenues or total income, operating income, whatever you want to say. You think we're going to do this? And yeah, we're going to do that. Turns out we're going to be able to do that. So probably would have otherwise been good news, but on a day like today when everything got sold, that's what you get. I'll point out real quick that Cigna said the exact same thing. Things are good for them. This stock is incredibly strong relative to the rest of the market. And CVS, they also said the same thing at the same conference. So a lot of good news there. So far, no real bad news coming out of that conference. I'll keep you posted. You've got Eastman Chemical here. Horrible day for them. They were not at the conference, but they lowered their guidance going forward, and their biggest problem there was logistics. So Eastman Chemical is having a problem with logistics, and maybe with a railroad strike, things get worse. You see what's going on with that. We'll see. And Peloton down 10% today. They lost their executive chair and somebody else. Two of the main founders, I believe, moved on. And we don't know a lot about the lady that they put in place. She is coming from inside the company, I believe. But you got some interesting times ahead for Peloton. They're going to still let you rent the bike, though. Do you want to rent the bike? What else do you got? Oracle's earnings came in weaker than expected. They blame Forex on that one there. And tomorrow we continue with the healthcare conference. We continue with the Communacopia conference and continue to shake off this madness that was today. Holy cow, right? Holy freaking cow. Anyways, I'll take your questions if I can to see what I can help you out with here. I'm just happy this all worked so far. So far, so good. Financial Wisdom says, Alibaba, what you got on Alibaba? What's the question? The question is a question. I think that's what you're doing there. And I don't know. Let's try this. Now, remember, who was it? Enrique was asking about this? Remember when you look at these stocks, I get it. You're interested in the Chinese stocks. A lot of them have great pullbacks in the meantime to look at. Alibaba's not one of them. You know what I mean? That's a tough one. Dead money here. You see no real strength being held, meaning people, you got a little pop here and nobody was willing to hang on to that. They want to sell. You now got a series of lower highs. Yeah, it's a tough one. I can't say I'd be so excited about that myself. I don't have to make that decision at the moment, but for that, I'm glad. Yeah, I think I know what's going on with the old keyboard here. What else you got? 4 and a 5% dip. It's hard to see any potential trend reason for the market. Remember the rule. You guys know the rule? They've been following around long enough. Was this on the bingo thing, by the way? I didn't get to see. Mike Skog, I'll say his name because he said it, but interesting thing that he sent. Was this rule on there? Probably not. You never buy the first move of the market. No, I don't think so. Okay. Okay. If you don't know, one of our clients sent in a bingo game, essentially with all the phrases that I say, I guess, commonly, and I didn't get to see them, but everybody's watching, waiting for me to say it so they can hit their bingo mark there. I don't think I said anything today. Did I? I didn't see any faces light up over there. You guys are all interesting characters there. You like Tesla? You think Tesla's holding up pretty well? There's a lot of, you got a news, well, first of all, you have one of the most volatile stocks in the market right now. But you have a lot of news-driven risk there, as they would say. It's a tough time to say, hey, Tesla's not doing much here in the last month. I think I'll take a chance. Don't you want to see that there's something, some support, some attempt at other people buying? You don't have any conviction that other people are buying. You could say it rallied more than the market. I don't know the percentage, but that has to be more than the stock market there. So relative strength. Today it fell about as much, but that's not fair. It's not a great day to measure that because it's broad index level selling today. So I just personally would wait to see that I'm not the only person that thinks this is the moment in time to buy, and I don't think you have that there. Meta's tough. Yeah, they're going through a big change. You know, they're that's cool. I like what they're doing, and they're trying to essentially turn an entire ship, but you got to be willing to hang on to that. Remember the Amazon days? I'm not saying that's going to be the same thing, but remember the Amazon days where you had to bet on the future and assume that execution was going to be 100% perfect, and if you were right, you made a lot of money. If if they were wrong, you lose. I don't know what's happening. Doing any football bets this season? I did. Yeah. I'm thanks to the Cowboys, I'm down $16.40. But I do. I'm the field goal guy. I make bets on field goals, man. That's my thing. And the one bet that I didn't make that was a field goal play was I bet the Cowboys to edge it out over the Bucks for some reason. So that cost me. But I did good on the other field goal plays. I should just stick to what I do. Facebook Live. That's a thing, right? Yeah. I haven't tried it, I don't think. Knowingly haven't tried it. I'm not opposed to it. I just, it's hard to get eyeballs over there. I know Facebook's trying hard there. YouTube gaming live's kind of sketchy. Isn't for gaming, don't the kids go on like Twitch and stuff? I think that's more popular for that. Twitch, owned by Amazon. Oh, look at you guys. Y'all are trying the Facebook Live stuff. There you go. And comments is like, man, I'm not even on Facebook. I'm on there. I just should post something. It's weird. At one time I had a thing with myself. I said, you always post like, hey, we're on vacation. Well, I'm going to post like bad stuff too. So if you're just having a bad day, I'm just going to post it. Right? If you're having a great day, just because I was like, everybody's always posting the stuff that makes it look like the world is perfect. I'm just going to put, got a flat tire, sitting here stuck on the side of the road. But then I gave up. I don't know. Seems like a lot of work. There you go. Okay, so happy. Everything went well today. We'll make our adjustments here and continue going forward. I appreciate you guys hanging out with us. We're going to continue working with this, multiple camera angles and all that good stuff, because, it's cool. Why not? Let's give it a shot. I appreciate you guys checking us out. jazzwealth.com. If you are looking to work with an advisor and you don't want to get toyed around with, we have nothing to sell but ourselves, and I will talk to you guys tomorrow.